Time for us to take a look at the 2026 first quarter. We have been successful so far in 2025. We have seen a double-digit return for most of the risk assets in Asia and the major stock market in Europe. How about in 2026? When we look back at the 2025 numbers, we saw there is an outstanding performance from the alternatives, from the gold, from the silver, and which is much more performing when compared with their last few years' performances. And we see the trend of a positive outlook will be maintained in the first quarter. We remain positive towards risk assets as a whole globally in 2026. And there are three key points that we would like to highlight. The relative outperformance to the benchmark, you need to have a good stock or equity selections, especially in the AI, IT related, such as the robotics and the AI applications, such as for the medical usage. The second point is a continual institutional diversification away from solely US dollar denominated assets. It will be continued, and we should pay attention to the non-US dollar currencies, commodities, and a valid alternative asset. The third point, China-US economic relationships is getting more realistic. It will be good for risk asset returns, and the downside will mainly coming from the geopolitical risk. In 2025, we see good returns for investors in Hong Kong equities, China A shares, gold and silver. US stock markets slightly underperform Hong Kong and China stock markets in 2025, and we still see some upside for gold, silver, and selective alternative assets. Overall speaking, our proposed barbell investment strategy on the risk profile works well so far in the past few years, and we need to have a combination of high risk and low risk assets to tailor fit for each one's investment risk appetite. So we will continue to adopt to this barbell strategy. Look back what had happened in 2025. We see a lot of military conflicts according to the Newsweek in December issue. 204,605 military conflicts record between 2024 and November 2025. Over 240,000 deaths and 6% of the global population was directly exposed to conflicts in 2025. And look at what is the debt level of US is amount to 123% GDP and also US dollar 37 trillion. What add fuel to the fire is the trade tariffs that have caused a 4.1% decline in global trade volume 2025 year to date. And also we see the consequential uncertainty impact to global trade as a whole. And all these factors, military conflicts, debt levels, tariffs, sanctions, etc., cause commodities such as gold and silver still benefiting from these uncertainties and uneasy manners of the investors. We think we still need to have a fundamental view, and sometimes we need to use the fundamental view to overcome the political concern when we see the military balance between the several major countries is not so biased towards its side. In other words, in a more dangerous equilibrium world, fundamental will have a chance. And so we should look at the economic fundamentals, technology edge, company strength, and any effective government policies. Hong Kong, China is still more attractive in terms of fundamental, and we don't have a big concern on the PAC, as we have mentioned in the last few quarters. Now the personal asset allocation for Q1 2026. We still see room for appreciation for the risk asset. So we altogether have around 25% of the portfolio exposed to risk asset. We have retained 5% cash in case of any urgency, in case of any bottom fishing opportunities, and at least 70% in the high quality bond and fixed deposits. As always, keep alert to changes. Enjoy the good return that you deserve in 2025, and wish you all the best in 2026.